So the million-dollar question is, when would the stock market rebound? So before we get into the topic, we also need to look at some of the signs before even predicting when the rebound is about to happen. First off, we have this foreign fund flow. Where did they go?
Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
You can see that the foreigners have been selling out of the Asian market, ASEAN market, not only just Malaysia, but ASEAN in general. You can see that year to date, most of the stock markets in around the Southeast Asia are down quite a lot, especially for Thailand, it's down 14.2%. Malaysia is down 5.8%, India down 4.9%, Taiwan down 2%, Indonesia down 6.3%. So it's basically most of the Asian countries are down. Only the countries that are making profits right now or are staying at a positive level, it is Hong Kong, South Korea, Vietnam, and also Singapore. And if you look at Malaysia itself, our foreign shareholdings, it is at its lowest at around 19.4%. The last time we hit this figure was around June 2024, which is last year, at 19.5%. And this is the all-time low. Foreigners have not been selling off a lot since the start of Bursa. So yeah, that's actually a very interesting data to see that foreigners are just being very spooked on the market in general. And you can see that most of these funds are actually keeping cash, especially the local institution and also foreigners. So number one, obviously, you look at the cumulative sell-off for foreigners is still down a lot. They sold, I think, close to 5.8 billion, whereas the one that is buying back is the retailers and also local institution. But local institution also didn't buy a lot. From our discussion with our research team, most of them are also keeping quite a big amount of cash just in case the worst happened. So right now, the only, I would say, investor who's really buying the dip, it is the retailers. So these are some of the sectors where foreigners are the net buyers and net sellers. The top three that have the most foreign inflows are technology, telecommunication, and also plantation, whereas the top three outflows are the financial services, consumer, and also utilities. So you can see that the numbers of local institution that is supporting the local stock market is not a lot. It's about 617 million for the 12th consecutive week. Not a lot if you compare with the Malaysia sell-off. So that means is that they are also just nibbling only. They didn't really like tank whatever the foreigners are selling. So they are being cautious, whereas for the retailers, they are still actively buying in the market. Now, you can see that this is a quick stats by The Edge on EPF's top trade for the past month. So you can notice names like Tenaga, Gamuda, CIMB, YTL Power, and Dialog. These are some of the names that they are buying a lot, whereas the companies that they are selling a lot is Maybank, IHH, KPJ, Hong Leong Bank, Sunway Construction, and whatnot. So this is basically, you can use this information and you can analyze what is actually the foreigners buying and selling. It's basically the total opposite of what EPF is doing. So whatever EPF is buying, they are selling. Whatever EPF is selling, the foreigners are buying. So that is one way to track what is the foreign fund flow. Now, this is the year-to-date fund flow for each of the institutions or each of the big investors. So far, the net buy company year-to-date is Tenaga, which is local institutions are the one buying, whereas who is the one is exiting Tenaga, it is the foreigner. And you can see also there's a lot of names, especially for retailers, they are buying, which are CIMB, YTL Power, Genting Malaysia, Nation Gate, and also Hatta Lega. You can see the number of companies that is bought by retailers are more than they actually sold. So basically, they didn't really sell a lot in terms of the top 20 stocks. Most of the names you see over here are all foreigners exiting the market. And also some of the names also institutions are selling out, which are RHB, Nation Gate, and also Hatta Lega. So clearly, this shows that foreigners are the one that is piling up or keeping a lot of cash. Local institution also somewhat, I would say, like they are 60% keeping cash, 40% buying back. Whereas for retailers, most likely they are like 80 to 90% buying the dip. The retailers right now are the back holders of the dips. So that is basically what is happening in the Malaysia space. Obviously, we also need to take a look at the global or macroeconomic view, because this is also some of the signs to know when will the market recover. So number one, we have over here, which is January 2025's rate cut. A few countries announced that they have decided to do some rate cut after the US announced their 25% basis point cut, which is on December 2024. But after that, Sweden, Australia, United Kingdom, and also the ECB countries, they have did a rate cut in January 2025 because their economy is slowing down already. That's why they are actually starting to step on the brake and trying to calm down the overheated market in their economy. Whereas for Southeast Asia, only Thailand is the one that is reducing their rates for in January 2025. The rest of the countries are still pretty much didn't really change. Besides, you can say that Philippines or even Indonesia. However, these rate cuts are actually when the US decided to do their rate cut. So that's why they kind of like follow suit. But after that, there's like no much of an news already about it. You can see that Malaysia and Vietnam, only these two countries are the one that has been pausing their rate cut for the longest month, and they didn't really follow the US, which when they actually did a rate cut. So that means that our economy is kind of like still okay. Inflation is still kind of, they can handle it. So yeah, it's interesting to see. And if you recall, just now we show you the previous slide, right, whereby over here, Thailand's the stock market is not doing that well, minus 14.2%. That's why they decided to do an interest rate cut. So this is a very, very important indicator when governments start to initiate some sort of rate cut. It's usually not so good sign. It means that the economy is not growing already, it's not doing so well. There's maximum pain with their market. So that's why they need to do some sort of this measure in order to stimulate economy. And another important indicator we have here, which is the 10 minus 2-year treasury yield. So you can see that the shaded one is basically times where recession does occur. And we have either two scenarios that will happen. Because right now our 10-2 is around like here, right? It's hovering around 0.3 basis points. So number one, either the 10 minus 2 would go up and then you start to trickle down. So it kind of like delaying the recession from happening, or it could be like case in point in 2008, whereby the 10 minus 2 actually kind of like hit to at a point over here, which is around 0.4 to 0.5, and then it accelerated to 0.9 to even like 1, so close to 2 points, basis point. So yeah, these two scenarios could happen. We're not sure which one will likely to appear first, because Trump's tariff war is very unpredictable. He is essentially the one that is causing a lot of volatility in the stock market. So yeah, I mean, we need to see what is his next best move, right? But for this 2025, it's definitely going to be a painful year for all of these investors, or most investors. And you can see also some of the big fund houses are actually keeping cash in order to mitigate the worst when it actually happens. This is basically the S&P 500's movement based on some of the, I'll say, events that happened in the past. So if you recall, right, Trump actually was first elected on 2016. When he was there, you can see that there is also some sort of like tiny correction, about minus 7%. But after he accelerated the tariff war against the China, you notice that the S&P 500 corrected 17%. So that is where things start to become more real, and also the trade war is actually happening between these two big powerhouses. The next one is basically happening in 2022, where there is a major correction in the technological industry. So that actually impacted, obviously, the Malaysia Bursa Tech Index as well. And it's a minus 25%. So that is a total crash for that particular time. And right now, we are just at minus 5%. So we don't know whether which scenarios will likely to happen. Either it's going to be minus 7%, like the very first of the when Trump was elected. But what will most likely happen is the second scenario, where the market actually corrected about 17%. This is quite a major correction. However, I believe it will happen sooner or later already, because our market is just, or at least the S&P 500 has been overheated for quite some time already. It has been rallying non-stop. So temporary or short-term to long-term correction, it is expected to cool down the market. The worst case is actually, let's say, some catastrophic events happen. So that's where the market start to tumble 30%. I believe this minus 30% will only happen if, let's say, Nvidia's business has been impacted a lot, or maybe even Meta's business, Amazon, basically the Magnificent Seven. If let's say they reported very, very bad outlook, that is where the market will start to tumble a lot. I believe at that point of time, Meta share price also tumbled to around like at the bottom of $90 to $70, if I'm not mistaken. So yeah, it's an interesting time to see again whether this will happen or not. If it does happen, boy, that will be a time for value investors to shop. So the final thoughts over here is you need to know what is the duration of the market correction, the potential market correction. So the precedent time, if you look at the 10-2 yield curve, it could either happen, the pain could last for 3 months, or it could last for a year, which means the entire 2025, or it could, probably rebound at around, I would say, June to July. But we still don't know what is the next move for Trump, right, on his tariff. Because April, we also have another tariff announcement by Trump on all major exporters and also some of the sectors like your aluminium, automotive, and also pharma and semiconductor. So yeah, there's a lot of pain that is going to be happening for 2025. So yeah, this one is basically your move or your call, whether you think that this pain will last for 3 months or 1 year. If you want to be more conservative, maybe you can expect it to last for 1 year. Another point is that many investors all around the world are actually buying more the US 2-year treasury bond, and they are selling a lot of these 10-year bond. What this means is that they don't see an attractive deal in the market right now. At least they are exiting a lot of stocks, they're exiting their crypto position also, and they are buying a lot of these 2-year bonds, which is giving them around 4% yield per year. So yeah, what the message is trying to tell you, it is that they don't expect the stock market or crypto to be better than the bond market, which is giving them 4% yield. So what this means is probably you want to expect lesser return for 2025. And also they are selling out of 10 years, which means they're not confident with the outlook of US for the next 10 years, or probably it's just not attractive to wait until then. So yeah, for the time being, Warren Buffett is right again. The fact that he sold a lot of his stocks and buy these, I think 3 months to 6 months treasury yield bonds at a 5.5%, and he's actually the first few to actually bought a lot of it, shows you that he's still the GOAT in value investing. So yeah, everybody is just following Warren Buffett's move. The third one we have over here is when OPR start to cut in Malaysia. Right now, the OPR, the Bank Negara announced that they are going to be maintaining the rate for the time being. I think some of the analysts also projected that the OPR will remain at 3% throughout 2025. But I'm not sure whether this will continue to happen or not, because if you look at some of the yield in MGS for Malaysia, the 5-year interest rate swap, if I'm not mistaken, the yield actually start to tumble slightly, which kind of like indicates a rate cut may be coming soon. But we still don't know whether that would happen or not. There needs to be some sort of pain in Malaysia's economy for the Bank Negara to actually cut the OPR rate. So far, we are not seeing yet. But a removal of subsidy for T15 starts to come in once inflation starts to trickle up because of minimum wage or whatsoever, or maybe even tariff. I think that is the time where we will see some sort of OPR cut. And let's say if the OPR does cut, it is also another signal that a recession is brewing, at least for in Malaysia. So yeah, that's also another signal. The third one, which is OPR cut. And last but not least, should you be staying invested or should you keep all cash? Well, this is actually two sides of the coin. I'm still a firm believer of staying invested in the market. I'm still invested in the stock market. However, obviously, my positions are more defensive since 2024. If you guys didn't know, we have been talking about this, talking about plantation. We have been talking about buying companies that give out good dividends since 2024. So yeah, those are the companies that I have been holding for the past 1 year already. Yeah, and I've been staying invested, and I'll just be collecting whatever dividends that they have, versus being all cash, because all cash sometimes it's also not good. Like, who knows whether this correction will last for, let's say, 3 months, right? And then you miss out most of the gains or the rebounds that will happen after 3 months. But it could also be the case where the pain will last for a year. So it's actually just a double-edged sword, whether you want to keep more cash or you want to stay invested. It's basically depends on whether you have the idea or the stock idea that you think the valuation has been depressed for a lot already, and you think that the future business prospect is going to be good, they're going to be paying out good dividends and also cash flow, then I believe you can still buy some or nimble some of these companies. But yeah, I think 2025 is a year where everybody needs to be cautious and also be prepared for any potential opportunity. And basically, these are whatever I shared at the thoughts over here are the signs when the market will rebound or recover. It is number one, you need to see whether the yield curve has hitched to 0.4 to 0.5. So that actually usually tells you max pain is here already or potential recession is here. Number two is when the Bank Negara starts to do some sort of rate cut. Before even they announce a rate cut, I believe that is the time also to probably nibble some position because probably things will start to turn. The third point is when the market in general, everybody is saying that the stock market is uninvestable, or they say that start to blame the Madadi government. They say, after you take over, then the stock market cannot perform. Those kind of stuff, I think, are signs or indicators that probably we'll be seeing a rebound or a stock market recovery soon. Hopefully you guys learned something in this video. And before you guys go, make sure to check out Fire Pro. And if you want to see how we do our write-ups, companies that we have initiated into the portfolio, some of the companies we actually did added for the past few weeks. So if you want to know what are the names, it will be inside Fire Pro. And if you want to know what companies that pay dividends on a consistent basis, which is a best thing to have at this point of time because of cash flow, right? Definitely you want to check out the Boeing portfolio, and these are some of the companies that have been paying out in terms of their dividend yields. One of them, they paid about 14.4%. Very, very big amount, but I'll pay more close attention to this EFG, who has not been paying a lot of dividends at the moment. So probably in the next few months, you see that number start to increase. So if you want to get a taste and you want to see how we do our write-ups, you also want to see some sort of our samples inside the SIP program and how we do our management notes for Fire Pro. Everything, it is for free and it will be inside this Fire Free Sample program. And the links will be in the description and comments. So yeah, that's about it for today's video. Hopefully you guys are more cleared about the market's direction for 2025. And make sure you guys continue to stay invested. If you are still spooked, if you are still scared about the market, it's okay to keep cash also. Whatever strategy that you use, make sure it is all informed, right? So that's about it for today's video. See you guys next week.